Good morning, good morning. Happy Friday, April 24th. Welcome to the pre-market analysis, QOL Trading. And let's get right into things right now. We do not have any economic data for today. There's some stuff coming out for Canada, but nothing that I think will impact us too much. We're done with the earnings for this week. However, next week, let's touch about what's happening next week. Heavy data next week. Pretty packed. So let's start with, I think it starts coming in Wednesday. Wednesday, we've got some Fed speak at 1 o'clock. And, I think it should be moving the market a little bit, move the needle, depending on what's going to be said there. There's a bunch of earnings that are coming out next week. I'll set up the earnings calendar by Monday. And then we have core PCE on Thursday. We have GDP numbers quarter over quarter, unemployment cost index. What else do we have? And then we have ISM manufacturing to top the week off next Friday. I'm trying to see what we have here today. We do have something today at 9 o'clock here. We've got the revised University of Michigan consumer sentiment at 9 o'clock. It's an orange folder, typically yellow versus, it goes yellow, orange, red, right? Red, you have to pay attention. It's going to move the needle. Orange is medium, and then yellow typically doesn't do anything. This is an orange folder. The problem that I have with this is it just seems politically based here. These numbers don't make sense on these are going to be inflationary numbers that are coming out right now. So I would not. I wouldn't pay too much attention to this because there's a big disconnect between the inflation numbers that are coming out right now here from the University of Michigan sentiment report versus what the Democrats and Republicans are saying right now. It just doesn't jive. Anyways, that being said, let's get into things right now. If you are new to the channel, subscribe to the channel and hit that thumbs up button and like this video. And then down in the link below, you can join our Discord community for live trading from 9:30 a.m. to 11 a.m. Eastern Time. If you go into the Discord community above the QOL Trading desk, there is a link. It says Get Trade Desk Access. So you may have gotten some access before. I don't think you're going to get that anymore. So in order to get that live trading from 9:30 a.m. to 11 a.m., you're going to have to go into the trade desk access. I would show that to you right now. I will do that on Monday, but I'm having trouble getting into the Discord on this computer. Otherwise, I would show that to you right now. But I will make a short little video to help everybody. Anyways, as usual, if you want me to cover some other things, leave a comment down below. I am going to start over the weekend. I am going to start putting some levels in our levels channel on the Discord community. So you will, if you put a request in on what different levels that you want me to cover, I'm going to make a screenshot and I'll put that in there with a short commentary on some longer term levels that I see here. On edit to listen, I've listened a couple times. Okay, I'm not sure what that is. Anyways, let's get into things here. So let's talk about what we are typically talking about every morning. We'll start off with the VIX. Yeah, I'll get to the SPY. No sweat. So we'll start out with the VIX. So right now with VIX, we got an open gap here from the 17th down to 1746. Gap up. It'll probably close that. We are above the 20-day at $18.27. We do have some open gaps above us at $22 and a penny. And there's a gap down from $25.74 from April 8th. And then we do have one that's up high here at $30.34 from April 30th. So we do want to see this, kind of taper off, and we want the VIX to be just nice and casual down here and not doing much. So we do have this open gap to fill here, and what that means is if the VIX pops up here, that the equities are going to drop down lower. And, it's just a reverse effect, and it's just talking about the volatility of the markets here. Let's talk about what's happening with our oil markets right now. Oil is elevated here. This is the Brent crude, which is happening over in Europe right now. So popping up. Right now, it's above $100 a barrel. I'm not surprised. And we are above the 20-day moving average at $100.78. We're popping up to some certain levels up here. I've got the 106.51. Should get a little resistance up here right now. But I think that once we get a true ceasefire and they can figure out what's happening over there in Iraq here, this level right here, 109.93, I would expect we get a little resistance there. I think oil truly can dip below and get back down to 78. Maybe, honestly, I think we could get it down here to $72 a barrel, maybe even lower. But right now we are elevated because it's the fog of war that's happening right now. People don't really know what's happening there. And as far as what's happening here in the United States here, as far as crude, we're still in between the 50 and the 20-day moving average here. So we are below $100 a barrel, sitting right now at $95.56. But we are above the 50 at $87.21. So you're gonna have to watch these levels right here. So you had, right here, this was a ceasefire move that happened over the weekend. So, I would say that there's going to be some risk off that's going to happen right now, based on going into the weekend, because nobody knows what happens over the weekend, and that's when it scares people. So I would not be surprised if we get a little pullback on our markets today, and then you're going to see a little spike in the oil market and in the VIX today. So let's get into the ES. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, and like this video. Let's read what you guys started. I meant I'm excited, and I've listened a couple of times, but I've listened to the opening with you. Oh, okay, no problem. Glad to have you here. Anyway, so what you'll see here every day, I'm a rinse and repeat guy. So I pretty much go over the broader market. I start with the broader markets, and I'll answer questions. And I want this to be a pretty much back and forth. People, I want questions to happen, interactive questions every morning. If not, it's not a big deal. I'm here to give you information that I have. I've been trading. I was trading on the floor down in the S&P pit in the Chicago Mercantile Exchange from 1989 to 1995. And then I left the floor there, and then I started trading off the floor. So I have many years of experience going back to 1989. I can't just sit here and write a script every day. So if you ask me questions, I can give you the answers if I have them. I do not have an ego, so if I don't know the answers, I'm going to tell you I don't know. So that being said, we are elevated here right now. We are kind of in a consolidating pattern here. We are on the ES right now. We're looking at a 15-minute chart, and we do not have any, levels up high here. Why? Because these are all-time highs. So the only levels that I can really put in here right now is an extended Fibonacci level at 127%, sitting at 72.3641. And so you can see right now we are, toying up here. I would like to see some pullback. I think that, and I always say this, that a pullback is very healthy. And then we have some point of control levels. There's a point of control level that's open down here that's from the 7th. That's really open from the 7th we have down here. Wow. Huh. Okay. Yeah, so we have some point of control levels that are open here. There's one here from the 16th first level down at 7,069. Do I think that we're going to I don't necessarily think that we're going to pierce down that low today unless something earth-shattering comes up. What I think would probably happen when we get down to these levels, I think we open up lower on those levels. I don't think that we have a move that happens during the day. So I think that for today, what you're looking at, it's definitely heavy up here at these all-time highs. So you pay attention to that. You definitely have to pay attention to where we are in the marketplace right now. So we are above the moving averages right now. We're well extended above the 20-day moving average, right down here at 68.40. Here's the 100, and they're all bunched up together. The 50, 20, and the 100. 100 is sitting at 68.70, call it. And 200 is way below down here. So what typically happens is the market wants to kind of gravitate back to these levels. Or what will happen is over time, the market's just going to kind of consolidate, and then every day that goes by, these moving averages will start to creep up. And that's how the market kind of does its housekeeping. However, we have point of controls, and these point of control levels, are automatically generated. It's a script that I have on my charts. And it's not too often that we have open point and control levels on the broader markets here. So we do have some, a big point of control here at 68.70, and it lines up with all of the moving averages here. So I do like this level for a pullback. It's a significant pullback if we do get it, but right now, we are consolidating here. So I think that for today, your pullback, a decent pullback level, if we do get it, you have to look at your previous high. So yesterday in the pre-market, I said that a good level here was this pre-market all-time high, was this all-time high at 7,089, and we came down here like a champ. Dip below it, little liquidity grab right here, and boom, pop right off it. So, like I said yesterday, take a snapshot of these levels that I have here, and if you're trading these levels during the day, use these levels. If you're in the positions, these levels are pretty good. I do put a lot of time into these levels. I have point of control levels. I have previous all-time levels, all-time high levels. I've got a regressional trend line level here sitting from some October 12th of 2022. Okay, so this level right here is a pretty good level. It also has some confluence with the 70.69.45, which is an open point of control level from April 16th. Pretty decent level right there. And then also right here, you've got an all-time high at 70.40, a previous all-time high at 70.43 from January of the beginning of this year. So another good pullback level. So right now, thesis for today and for most markets, you're looking for pullback longs, right? So let's get into the SPY. And the SPY is going to look similar, right? It's just ETF of the ES here. Oops, excuse me. So the SPY. So the SPY is same thing. We're consolidating at these higher levels, right? So it's not breaking out, but it's not pulling back. So that's telling me there's still some strength in the marketplace. And as far as upper levels, same thing. The only upper level that I have here on the SPY, we did create a little high here at 713.38 pre-market. I've got a 734.01, which is a 127% extension on the Fibonacci. As far as our level pullbacks, you can take a snapshot of these levels right here. Same thing on the SPY as the ES. I had this level yesterday morning. We spoke about it in pre-market yesterday. This would be an ideal pullback. It's a previous all-time high. Break and retest type of strategy. 702.78. Same thing. Like you're looking at a mirror. Came down here like a champ. Tiny liquidity grab. And then we reached higher there. So now what happens is if you come down and you try to test a level more than one or two times, you can see right here, it tested it one time here, here's twice. Third time it comes down here, you got to be careful because it's almost like, if you're hitting a wall a certain amount of times, right? So you can see what happened here. Here was the high, popped above it. This is the break. You broke above it. You came down here, you tested it. You came up here, you tested it again. Well, if you come back down here again, you have to be wary that it may fail, right? So the first time it comes down, that's a great signal. Second time is another good signal. Third time, you got to watch the price action, right? So be careful if it does come back down there this time. You could fall below that one and then start reaching these lower levels, right? So take a snapshot of these levels. Here's a beautiful point of control that we have open at 682.26. Why is it beautiful? Because you have confluence. It lines up exactly with the 100-day moving average at 681.93. Take a snapshot. Good enough. Okay, we're moving on. We're trucking. Okay, here we go. NASDAQ. NASDAQ I like a little more than everything else. If you can see the NASDAQ, so we are consolidating, but I said this yesterday, NASDAQ was consolidating higher, okay? It wasn't kind of straight, flat. It wasn't kind of like a dead pattern here. See, it's like tiny, creeping up, right? That's why I like that. That's why I like the technologies right now, right? Because look at this beautiful stepping higher, coming up here, and now it's getting used to, the market's getting used to this level, still getting used to it. Same thing on this. Everything's at all-time highs right now, not used to what we're doing here up here. So we have this 27,931.17, which is a 127% Fibonacci level, right? So once we get up here and we start playing, playing in the sandbox up at these new highs here, it'll start to create some new levels here. But right now, same thing on the pullbacks here. We didn't have, so here, now what I was talking about yesterday as far as my levels, I'll have these levels up here and I see how they respond, right? So you can see this level right here. I like this level, this 26,569. Why? I go back and I look and see how it responded in the past. So right now, this is a good level. So I like it. If the NASDAQ did actually pull back again to this level, this is a good level. It did not really get tested in my eyes. This is a tiny little test here. It wasn't the big extreme. If it comes back down here now, this will be a true test, right? Because this is not really an expanded break and retest. It was kind of like a little consolidation retest. So I still like this level. It's pretty good. This would probably, if you did lose this level, this would be a pretty decent level. This is a previous all-time high from October of 2025, sitting at 26,399. Why I like that? Because you can kind of call it 26,400. It's a psychological number. Whenever you have those even numbers, you always get some kind of reaction there. And it's just above this midline regressional trend line that I have here from October 12th of 2022. And then here we have another open point of control at 26,181.19. It's also sitting right above a regressional trend line that I have here from August of 2025. And it's a higher end regressional trend line. Okay, so that is a truly higher break and retest. Okay, so anybody that knows anything about a break and retest strategy is you break it, and then you come back down in the market, test it. Okay, so this level has not been tested yet. So this is a prime open level. It's a beautiful level right here. If the market does pull back here, I'd be watching that level if it does pull back there, which it's all about probabilities. I can't say 100% it's going to pull back there, but probabilities tell you that it should pull back there, right? So anyways, by the way, this is an educational channel, people. So I try to give you my knowledge of what I have, but you have to do your own homework. I want you to be your own trader. You can't sit here and wait for me to tell you what to do, because that's no way to learn anything. You have the old expression, give a man a fish, he eats for a day, and teach him how to fish, he eats for a lifetime, right? So anyways, let's get into the Qs. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, and like this video. Same thing on the Qs. Qs, same thing. We have these open point of controls. I like starting up, looking at this holistic picture right here, very extended from this point of control here from the 13th. 614.31 is a nice level here if you have that good pullback, okay? Same thing on the upside here. We have no levels to look at here other than this extension of the 127% Fibonacci at 674.49. Let's look at what happened yesterday during the day. So we can look at some of this. So this is a previous all-time high that I had here. And so this is what I'm going to do for this level right here. This level does not look like anything for me anymore. So yeah, it was a previous all-time high, but as I go back, it doesn't really show me anything. So if I was trading in the Qs today, I'm taking this level off. I don't care if it was a previous all-time high. I'm removing it. I think there's better levels. Even if it does bounce off that level, I think that there's better level pullbacks that you could get into that have a better risk reward. Okay, so this level I'm going to leave up here. This is a regressional trend line that I've had here since April of this year. It's a midline, okay, and it's trending up. So we're going to leave this line. So this all-time high from this week or last week, April 16th, 642.18. I like that. See how it bounced right there? Had the all-time high, and then here on the 20th, which is I think it was Monday, bounced right off that level. Tuesday, bounced off it again. So you'll probably get it again, but same thing like I said before. This is the third time it'll probably come down here. You have to be wary. However, if you do lose that level, you come down to this, what do I got here? This, oh, that's right on the line. That's a midline regressional trend line from October 13th of 2022, and it's also a previous all-time high at 637.01. So this is a pretty decent level as well. And then, of course, if you lose that, you come down here to the 629.21, which is a December monthly high. So I like monthly highs. Those monthly highs have a lot of leverage as well. And it's just above this 626.74. And why this is a good level here is because if you're down here and you're trading and you're trading the Qs and you get long here, your stop is an easy one. You're putting your stop at 626.74 right below that, right? If you're wrong right here, boom, you're out. You're not going to put your stop down here at 617. You're getting long here at the 629.21, or you're giving yourself to this level right here and putting your stop just below, right? And so when I get into my trades, and if you come into the trading room, you'll see when I get into every one of my trades, I talk about not how much money I'm going to make. The first thing I say is, where is my stop going to be? So, and I'll get into that in a second here when we're going to get into Tesla. So again, if you're new to the channel, subscribe to the channel, hit that thumbs up button and like this video. So let's get into Tesla, and this is what I was hoping for in Tesla. Talking about these point of controls, we're going to clean this up here for you because I know this is my trading chart, right? So you can see a lot of levels. So when I'm trading and I'm going over scalping, I scalp during the trading session. It's all I do. It's and two of my accounts I trade on, they're 100% flat every day. So all I do is scalp, and when I leave the computer, I'm flat in these accounts. I have my long-term portfolio. That's different. But this, what I do every day in the trading room, it's 100% scalping on options, and that's it. So here's the point of control chart that I have here. And some of these levels, they've gotten filled. They've been filled, and I write filled here. But I leave them up here because sometimes they have they're used as good levels. And if they don't work anymore, I'll take them off. Like, for example, this level right here, that was filled on 318. Okay, it was 397.89. This was, that was the initial point of control, and it got filled almost a month later. So it dropped down below. It created, and I'll show you, how it gets created. So it was created right here on March 18th. So here's the point of control. It shows the level where the majority of the trades were made during that day. And then if the market doesn't come back up and hit it in post-market or pre-market or the regular day trading, I leave that market open. I leave that point of control open until the market comes back and hits it and where it hit it right here, right? So the market it likes that housekeeping. It gravitates back to certain levels. So now what happens is, so that point of control, it was filled on April 16th, right in this area here, okay? So now what happens is I'll leave these point of controls open. I have a point of control open. This point of control here was open since September 11th of 2025. It finally was filled on March 20th of this year. Now I leave this level open. So I see, I not open, I call it filled. So it was filled, and why do I leave it filled right now? Because I use that. If the market comes back down here again, it could be another level I could use for a support level, okay? That being said, we still have an open point of control level here from September of last year and sitting down here at 334.07, okay? So I can show it to you. Let me see if I go back here. Let's go 360 if that gives it to me. No, let me go 180. 180 may be better. So if I show you this on 180 days, it should show me what we're looking for here. So we go back, and does it give it to me? Yes. Right here. So this is September 4th of last year. You could see this level is open point of control. The market shot straight up since then and did not come back. And I leave these levels open until the market comes back and touches it. And it will fill. I shouldn't say will fill, but the studies that I've done, the market will come back down and gravitate towards these point of controls and fill. Now, we had an opportunity for that level to fill. I think that was right about, where were we here? Yep, it was right here on the 7th. We almost got down. I really wanted that housekeeping to be done and fill here so we could continue to move up. Why? Because we still have a lot of point of controls open on the upside. We have a point of control open here at 455.12 from January of this year, and we have a 478.39 point of control open from December of last year, and this is from the highs of last year. So that's exciting on the upside. However, we still have some housekeeping on the downside to take care of first. We need to fill this. I really would want to fill this first before we then move our way up to the upside. I don't want to see this fill first, knowing that we have this open, right? I want to have things nice and tidy. We fill this 334, and then we move up. If anybody was watching Tesla all last year, I've been watching Tesla for years now. Tesla made new highs at 417 at the beginning of the year, and then it pulled back. I think it pulled back to maybe 200. I know for sure it pulled back to 207. It may have even pulled back below 200, maybe even the 190s. And then it shot up to 478 before the year was out. So there was a point of control level that was open at $416 a share from January, the beginning of the year of 2025, and it didn't get filled until September of last year. So that's what I'm talking about, that these point of controls, high probability that they get filled. The $1 million question is when, right? If you knew when, then that's when you can really cash in and make some big money on. So right now we're kind of like in a we're kind of in a no man's zone here, right? We don't know if you're going to head down here. If you lose, one thing I'd be confident about, if you lose this 20-day moving average, and this is a cleaner chart to look at, if you lose this 368.92, I did have some decent levels down here yesterday. Let me just go back to the trading chart. That'll show you better. I did have some good levels down here yesterday. And we didn't quite get down here to this 364, but I had a 367. This is an all-time high was that? Yeah, that was this year. Not an all-time high. That was a high from April 14th of this year. So you use it as all-time highs as a break and retest level, but it did come down. It did support that 20-day moving average, so you have to pay attention to that. So I would say if you lose this 20-day moving average, and chances are, unfortunately, a lot of the times you'll lose these kind of levels in a pre-market or over the night news. So you come in over the night, there was some kind of news, and all of a sudden you gap down, right? So unfortunately, that's what happens a lot of the time. So you have to pay attention. Same thing, take a snapshot of these levels if you're trading. However, we did lose the 50 on the, after the earnings call. So that's pretty significant. We lost the 200 all on the same day. So you're losing these moving averages, so you have to pay attention to those moving averages. And then you see this red line here. This is a regressional trend line that I have here. This is from the all-time high. Okay, so if I fan out a little bit and show you what it is, it's this level. So what I do is I take a regressional trend line from the all-time high and I draw it, and I pretty much scale it from the all-time high and draw it down here, and it plots it for me here. It gives me the high end of the range, and then the low end and the midline. The midline, okay? So then I'm able to then get down to a macro level and see it from that level here. So you can see this, I can see, obviously it looks like a lot of noise to everybody, but right here, I put my cursor over it and it shows me this is the high end of that regressional trend line that I drew from December 26th of last year. So now you can see we were trying to hold it, and we did hold it previously. Let me go back 20. We did get above it. It's 20, oh good. So you can see right here, we got above it, and we were trying to hold it, right? We tried to hold it right here, and then we failed it. And then boom, right to the T, we failed that level. So that's a level you pay attention to. So if we pop today, this is a level I'm going to pay attention to, this 379.50 level. And then even a better level is a low. It's a break and retest. You break and retest a low the same way as you break and retest on a high, right? So if you break and retest a high and you come down to it, that's a level of support. If you break a level of a low and then you come back to it, then you sell into that, right? Or that's the concept, right? Then you're taking a short because you break the low. It's a break and retest of that level, right? So we do have a bunch of levels here. There's a 20-day exponential moving average at 377.54. It's respecting that in pre-market right now. You could see this 200-day exponential moving average sitting at 390.59. If it does pop up there, that would be a level as well. And then this thicker line here, this is a monthly low of from February of 2026. These levels are significant. That's why I have a thick green line there, because monthly highs and lows are significant levels that you have to pay attention to, right? So on the what I was saying on the broader markets today earlier, when you have certain levels that come down as support, it was a good level of support. Showed it was good level yesterday, twice, 3 times. So now you have to be wary. If it comes down here again today, it may not be so strong. So I'd be wary today if Tesla does have a pullback into this 20-day. It may initially give you a little support, but I'd be wary of that because it becomes a little weaker as it comes and tests the level a third time, right? So tested it once, we'll give it twice, and maybe not count that because it was after hours. But so be wary of this, right? That there could be some downward pressure, especially after the earnings call. And the reason why there's some downward pressure on Tesla is because they went from $20 billion to $25 billion in capital X. Capital X is capital expenditures. And so you spend a lot of money on the future is pretty much what Musk is saying. That's going to pay huge dividends. And if anybody knows Musk and has confidence in what he does, that's what they're banking on. They're banking on the future. Another thing to pay attention to is this big push to the upside. This became a huge speed zone right now, and we did not quite fill it. Almost, we almost filled it. So when you get a big, purge, one direction, no sellers, right? This is buyers and sellers right here, not one directional. When you get one directional like that, it becomes a speed zone. And if you lose certain levels, so like this level right here, once you lost that level, it's a speed zone. So right now we are currently in a speed zone, even though we covered a lot of it yesterday morning, still didn't quite fill it. I think we still have some levels to go, and I think that's below the 20-day moving average and this coming into this high from April 14th. So my thesis today, I wouldn't mind seeing a little pop and fade. I'm still a little bearish on Tesla. Long term, I'm bullish. Short term, right now, you can't ignore this, right? It's definitely showing you. It's showing you a little, choppiness here. That being said, let's get into what we're going to do today for our trading. So for our trading for today, I'm going to have two. Strike prices up here today. Today's expiration, I'm going to start with the first half hour of trading today, and then I'm going to have the expirations on Monday up here also. Today's expirations, I'm going to start with 375 calls and 375 puts. They're both going to pretty much be close to in the money. You can see we closed at 373.72. So that's going to be on the put side. It's going to be in the money. So these premiums will probably open up in the fours, probably right about the same thing. And this 375, it's approaching about that same level. It'll probably open up high twos, maybe in the low threes. So that's pretty much where it's going to open up on the premium side. And we could go, and then as far as after the market continues to move on, I'll probably switch to Monday's expiration and expand my call price to maybe 390 on the call side, and then maybe a 365 on the put side. Give myself a little space on the strike price because I'm buying a little more time. As far as what I'm going to, as far as what we do in the trade room, we go and we look at the 5-minute opening range. So when you get your 5-minute opening range, yesterday, you could have gotten it on both sides. It was a bit choppy day and it pretty much stayed within the range yesterday. But first 5-minute opening range yesterday, you had 374.58 for a low, 376. So you had about a $2. You had excuse me, I read that incorrectly. You had about a $9 range yesterday, 371.20 to 380 for a high. And once you broke the high there, you could have gotten yourself about $6 there. So that translates into about $3.50 on your premium there. So if you bought a one lot on your premium, meaning that if you bought a one lot here, no matter what this premium price was, this premium price is going to move on a delta on when you're buying options. You pay attention to the delta, and typically the deltas that I trade, and I'll make a video on this if I'm talking above everybody's head. For every dollar that the equity price moves, I trade at 40-cent delta typically. So that means that this price will move, the premium price will move about 40 cents for every $1 that the equity price moves. So you call it 50 cents for easy math. So if this moved if this moved $6, the premium price is going to move $3. So if you bought a one lot, no matter what price you paid for it, you would have made $300. And the same thing on the put side. So you got a little move you got the move on the upside and then kind of downside, and then it just kind of chopped around here. And then off the 20-day moving average, you could see right here, it just popped right off of that. And, pretty much from a 368 low, it pushed its way back up to 380. So that's where you could have made some decent money, but that's not the trade plan that I go over. But I go over this basic trade plan, and people can make their own trade plans from there. So anyways, if you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video, and down in the description, you can come and join our Discord community and do live trading from 9:30 a.m. to 11 a.m. Eastern time. And we created a link above our QOL Trading desk, and it's a get trade desk access, and in there it gives instructions on how to sign up and join our trade desk. Other than that, you can join the Discord community for free. But if you want to join the Discord community from 9:30 a.m. to 11 a.m. Eastern time, it will be a fee. If I don't see you in there, also one thing, join our newsletter. To join our newsletter, go to our website, QOLtrading.com, and I will put that in here. And if you go to our website, we have been making a newsletter every Sunday, and that is free. So just come there and subscribe to the newsletter. You'll get a newsletter every Sunday, pretty much going over the past week and the week ahead, what's to be expected. And I go over broader markets and pretty much fundamentals, any kind of geopolitical stuff that's happening out there. And this is all part of building a community. So anyways, if I don't see you in the trading room, have a great weekend. Keep your trading light. Don't ruin the weekend. And I will see everybody on Sunday for a pre-market ahead video. And if not, I will see everybody Monday morning. Have a great weekend. Talk to you soon.